Welcome back. You are still watching Power Lunch East Africa. Now, according to a tax gap impact report by the Commission of Revenue Allocation and World Bank estimates, the internal revenue potential of counties in Kenya is 216 billion shillings against the average of 31 billion shillings, which they net yearly. This means counties are missing out on an estimated 185 billion shillings in internal revenue collections every year. Alex Kanyi, tax partner at Cliff Dakar Hofmeyr, joins us live for more. Alex, thank you very much for making the time. A very good afternoon to you. You're joining us from Nairobi, Kenya. And let's look at this difference between the potential and the actual revenues that are coming into the counties. Is this worrying for you? 185 billion is the gap.
Yeah, this trend is quite worrying, considering that there have been persistent complaints around, simple things like getting medicines in our health facilities. There's the current drought that is coming up, and unfortunately, counties are not able to take care of that. So it's quite worrying that they could actually get the money to provide better services, but they're not getting the money yet.
And so this failure to maximize their vast revenue potential has really forced the counties to rely on equitable cash sent by the National Treasury. Is this really sufficient? Is this really enough?
No, the support that comes from the national government is not enough. And the major reason for that is because the money that gets to the county governments is not disbursed on a regular basis. So we've seen a lot of complaints from the Council of Governors, including one recently where the governors were asking the government to actually release the allocation to counties. So even though the counties are entitled to 370 billion, this normally comes late, and therefore counties are not able to plan for their projects, plan for their budget, and actually achieve whatever they've set out to do. So which takes us back to getting the revenues that each county could get depending on the potential. So if they can reduce the gap from the 30 odd billion that they collect to collect the 216 billion, or even just a percentage of it because of this potential that they have, then that could reduce the dependence on the national government and the allocations that come from the national government to the county government.
And how much of these misses in revenue could be accounted to corruption or graft?
Reading the report from the Commission on Revenue Allocation, they haven't quite mentioned a number as to what revenue could be allocated to corruption, but corruption is not the only thing that is making the counties not to get the revenues that they're supposed to get. So you have manual systems as well that the counties are using. So you have guys collecting cash or the revenue in cash, and sometimes this cash doesn't get reported. It gets embezzled. Over and above that, you have complex structures of reporting the revenue. A lot of the counties were reporting their revenue under a line called others, which is not specified as to what source of revenue what that was. So there's need for collaboration with the Commission of Revenue Allocation to actually educate our counties or the leaders in the counties as to how they report as well, so that this gap is not tied to misreporting, so that it is actually the actual gap. And then over and above that, you have capacity at the counties. So that most of the appointments that would come from the counties would be, politically kind of related. So getting professionals to run the counties, sitting in those executive committees would also help to boost the revenues.
And Alex, just listening to you, I'm forced to go back to the beginning when counties were being envisioned. What was the plan for them to get money? Were they to rely on the government, or what was the original plan?
The original plan was that counties would get some monies from the national government. So there are some taxes which only the national government can levy. So for example, the income tax, the value-added tax, the excise duty, custom duties. So those are taxes that can only be levied by the national government. However, when you read our constitution, and particularly Article 209 or 210 thereabouts, you see that even counties can collect revenue, and some of the areas that they can collect revenue on include property, entertainment, and then you have other sources of revenue where the parliament has given them permission to actually collect those taxes. So when I was reading this report from the Commission of Revenue Allocation, so they were reporting that there are 100 revenue streams for counties, but they're only focusing on a few. And this perhaps also informed the report on the gap that we have between the potential that the counties have to collect the revenue vis-a-vis what was actually collected by the counties.
Alex Kanyi, unfortunately, we have to leave it there, but thank you so much for making that time, and thank you for your insights. Now, moving on, the international